Hello, it's Brian Shannon from AlphaTrends.net. Today is Monday, the 8th of December, 2008, and the encouraging signs that I've been talking about in the market were followed through with some proof from price here today. We saw that Friday we had a nice turnaround with on the heels of bad news. When the market gapped lower on Friday and then it reversed and closed very strong. Today we saw it gapped higher and continued to be strong throughout the day. There was one little part of the day where it looked as though maybe the rally was going to fail, and I had suggested that on the blog and then put as it recovered, I said maybe that was just a shakeout. Looks like the next target or next likely level of resistance would be found up near about $30.46, which was daily R2. And I'm not going to put that on here, but that's pivot analysis. So you can take a look at that, at Google or something like that. They're not necessarily the most important levels in the market, but they tend to be, like Fibonacci or anything else, that a lot of times they are important levels because enough people are looking at them, so you want to be aware. All in all, though, the market had a very strong day, and we've seen this recent higher low that I said needed to hold has in fact held, and we've added a higher high as well. Now what we want to see is this level to act as support. That level is at about $29.35, $29.40. So we've seen that the market has pushed past this high right here, and again, that's going to be important as far as support. We have a rising 5-day moving average, so the intermediate term is innocent till proven guilty. But with a declining 50-day moving average, don't get too comfortable, basically. We can expect, I think, a little bit further upside, but as you saw, late in the day, it's going to be some very choppy trading. This market still has a lot of issues it needs to work out, and the way it does that is through time. Looking at the inverted head and shoulders pattern that we've been monitoring here, it looked like Friday we had pushed past that level, and I said we really wanted to see it get above this high before we start to have much faith that the market's going to continue higher. Just as a reminder of the height of this pattern, the head and shoulders, we take the height of the head, add it to the breakout point, and it gives us an upside objective near about 33.5. That is a super aggressive upside target and not something that you want to be fixated upon. Instead, you have to look and expect that we're going to see selling, perhaps at the declining 50-day moving average. This level, I think, right here where we had prior support turn into resistance right here at about 32. That's going to be a big level as well. But right now it's small steps forward, and it's going in the right direction if you're bullish here. So we're seeing encouraging signs still. You don't want to get too complacent with the upside scenario where we remain in a primary downtrend. The volume isn't real impressive, but only thing that pays is price, so continue to listen to price. More important than what anyone is saying on any of the financial news channels or any of the any news that comes out of Washington or anywhere else for that matter. Only price pays, and Friday we saw some real bad economic numbers, but the market soared, and a lot of people emailed me saying, why did that happen? And simply because there were more buyers than sellers, and only price pays. When that market retook that daily VWAP on Friday, that was the time to get involved. So manage risk always. The market doesn't care about our opinion of what we think should happen in relation to any kind of news or whatever. Instead, just focus on the short-term trending opportunities. Right now, I think short-term, this is going to be important tomorrow at about 29.65. And of course, below that, we've got the 29.35. So 29.65, 29.35, and then back down towards 29, which is probably where we'll see that rising 5-day moving average come up and meet this market as well. There's encouraging signs, but it doesn't mean that this is going to be the bottom. It looks like, it's just a tradable rally within a primary downtrend. The downtrend remains intact on the larger time frames, so that's what we have to always remember. The oil market was up 5.4% today. Again, that's done nothing to change this primary downtrend. I had noted that Thursday and Friday we'd seen very heavy volume in here, and it was holding above that $33 level. And a lot of the so much bearish sentiment out there might be a contrary indicator. There's still nothing bullish about this, though. On a 1-minute time frame, it was really choppy trading in here today. On the 10-minute time frame, we're still below the declining 5-day moving average. So what's it going to take to get this thing back to an upside market, bull market again? It's going to take a lot of time for this market to heal. So we've got all kinds of levels up above that will act as likely levels of resistance, and just don't get too comfortable long the oil market. The Russell 2000 was, of course, also up nicely here today, up 4.4%. We had seen last week that it had held on a closing basis above these important lows here, and it's making, it looks like, a run up towards that 50-day moving average as well. If we take a look at, and we'll do this with the NASDAQ in a moment as well, if we take a look at the Fibonacci off of the election highs to the recent lows, this market for the second time is doing battle with this 48.20 level, which is a 2/3 retracement. That is from this high to that low, 38.2, 50, and 61.8% levels. So this market is, it's the second time up there. So it's showing the same thing we had seen with some of these other markets. And I pointed out Friday with the financials is that the buyers are getting more aggressive price-wise. They're not waiting for a pullback to 38 before they take control like they did here, and also time-wise, the test of in between here. What would be nice to see here would be maybe one more pullback down towards that 5-day moving average, and then a rally past this resistance. Then perhaps we could see further upside. But right now, the momentum remains to the upside. I think right now the support levels that you want to keep an eye on are going to be right around $47.10, and below that about $46.40. If we take a look back at that NASDAQ, we'll look at the 60-minute time frame here, and we'll look at Fibonacci off the election highs to the recent lows, and you can see we're getting close to that level as well. That is the 61.8% retracement. This is also an area that's been important in the past as far as support right here and resistance right here. So we're at a level, about 30.5, that seems like there should be maybe some some selling rather, and I think I'd still like to see a pullback and then a rally, but the market doesn't give in to what we want it to happen. So just continue to manage risk. But right now, short sellers are clearly early to the party because this market has some buyers in it right now. The semiconductors lagged today. They were up. They were up 3%, but they were the only group really unable to break back above the lows from October and November, and that $17 level continues to be very important. Getting above that will, I think, add to some upside in here, perhaps up to that 50-day moving average that's right around, coincident with these highs right here at about $18.75 or so. Looking at a 30-minute time frame, here again we can clearly see that $17 level is the important level. We've got, we basically, as I said Friday, this market between this range of 15 to 17. We're getting up towards the upper end of that level, so if it can break through there, then perhaps we'll see that move up to the next potential levels of resistance, which are, again, probably near that 50-day moving average at about $18.75, and that's coincident with this high from November 12th as well. Financials were up nicely. They were up 6.7%. More importantly than the percentage move is that they got back above the October and early November lows here at that $13 level that had been holding it back. Friday had said these higher lows and the more frequent test of resistance showed that the buyers are becoming more aggressive, and it looked like maybe a cup and handle in here. Well, we'd seen that a slight pullback and then that push through on Friday, and today confirmation of that with this gap higher and continued run. Again, there's going to likely be a lot of levels where this market encounters resistance. There's a lot of people still holding these financials and all these groups with large losses, and the natural tendency is that get me out even on these things. So there's still likely to be a lot of supply released as we move higher. As long as we can contain a nice stair step higher, though, that's what you need to focus on. This level here from today's lows at about $13.15 will be important tomorrow, as will the level from this gap that we had seen. So right here at about 1275, and then again keep an eye on that moving average there. That represent this orange one that represents the average closing price of the last 5 days. S&P 500 was up 3.5%. This group did also make a higher high and close above this high right here. It's getting close to that 50-day moving average. The 50-day moving average again is declining, so there's still reason to not buy into this, with real optimistically. That is, it is encouraging that it was able to push past the 61.8% retracement, but we've still got this level here that it's doing battle with right now. These highs from mid-November, right around that 92.25 level or so. You can see that's where we encountered a little bit of selling in here today as well. This market was a little bit weaker during the day, but initially this is about where that NASDAQ experienced a shakeout below VWAP, and then a nice rally as it got back above there. But then we've still got a lot of volatility. There's a lot of people looking at this market, and you look at all the headlines, they continue to be very negative. But again, remember that news and surprises follows the direction of the trend, and this trend, the market's a discounting mechanism. As that news gets released, a lot of times the people that were expecting that bad news to come to play, bet basically on that by selling short, and as the news comes out, they take that opportunity to cover, and that leads to further sideline money coming in and creating that momentum. We remain in a bear market. We're getting a good bounce. Let's not try to pick the top of it. That's up for the market to decide.